about last month, same time last Monday, the global mood in terms of what we were looking at, in terms of patterns, in terms of the moving parts, it was strikingly different. For me, what matters is that where do we stand and where does world market stand? And we're using 27th September as the starting point because that's the time when we saw a spike up in the Middle East tension. If you really add that up, well, from there, the world is looking like a very calm place. All major markets which really matter are in the green, and India is underperforming. Look at the breakup of Indian markets. I think it is largely large cap stocks which are underperforming. And the reason why large cap stocks are underperforming is because of this barrage of selling what we've seen from foreign institutional investors. So 4.5% down for the Nifty. That makes Nifty a weak market in last couple of days. And within that, the construct of the market is such that it's the Nifty which has underperformed the small cap index quite massively. The point I'm trying to bring out here is very simple, which is that out of the two concerns, which one was China and second was geopolitics, both those concerns, and the third was the US economic data. So the three moving parts in a sense are looking settled as of now. Nothing has flared up in Middle East. B, the China reverse trade is now seems to be petering out. And third, the US economic data, whatever data points have come on inflation, on rate cut indications, they've not really created any stormy environment. So the globally things are looking calm, globally things are looking settled, and globally things in a sense are aligned in the same direction as what you want, despite what the news concerns were. That's my limited point, that the world is looking like a better place than what it was same time last week.
Yeah, better, but on a net basis, not quite out of the woods, it seems. The Nifty has been seeing a decline, and for a second consecutive week now, you had names from the consumption space like Titan, Britannia, they were the top drags. And it wasn't all that great for the mid caps, although the small caps did manage to snap their 3-week losing streak. So that's where you did see some recovery coming in. Yes, there were pockets of outperformance there as well. You had a Nifty Pharma which managed to clock a record high. The defensive tilt was clearly evident. Some of the realty names did see a bounce back from the week before selling, and IT as well managed to gain. But, I think the big question mark, Nikunj, is whether or not there is a durable bottom in place or not.
See, Aisha, it appears to me, looking at the global setup, that the one-way linear decline what we saw in the market, that seems to be getting over. Now, are we likely to make a base here with a downward bias? Could we spend some time here, maybe next couple of weeks, trying to gauge, which could lead to a base building? That may well happen. And that, in my book, is a victory for the bulls. I go back to that same point again. From a scary global setup to a very calm Monday morning. That is how the market mood has changed. Same time last Monday, the global setup was turbulent, and now it is calm. The differentiation what I see for Indian markets is that earnings are not going to be that great. If last quarter earnings is any benchmark to go by, if high frequency data points are if that is a benchmark, and if the initial quarterly update is can also be an indicator, that I don't think we are in for any kind of an earnings surprise, which means the upside in the market really gets capped. One side you got this FIS selling, which is more like a bolt out of the blue, and if that is coupled with a earnings season where you will see more downgrades and less upgrades, then the upside in the market gets limited and restricted. So the trade this week is not what you buy before the earnings season, what you buy after the earnings season. And that's where I think you will see a lot of stock specific opportunities, because not everything is going to be great, not everything is going to be bad. Unlike last couple of quarters where markets are accustomed to changing the earning estimates because of good delivery, I think that phase of the market is over. So one side you have selling, second side you have earnings which is unlikely to beat the estimates. So market upside looks limited, but the local money, the HNI money, the fact that from 22nd of September small cap index is only down 1%, that makes you believe that the downside also gets limited and restricted. And I'm surprised that in last 10 trading sessions, the small cap indexes have fallen 1% and Nifty is down 4%. That's quite a contrast.
Yeah, absolutely. Having said that, the FI selling hasn't quite abated. Yes, it's not such a stark sell figure as it was start of the month, Nikunj, when October 3rd you had that, vicious 15,000 crore rupees worth of selling, or for that matter, even that roughly 10-odd thousand that you had on October 1st. It's come around to that 4,000 crore rupees selling on a daily basis, but the selling is persisting, and even standalone 4,000 is a large figure.
So, Aisha, for the better part of 2022 and 2023 and even 2024, FIs have been sellers.
Yeah,
so it's not something which is very big. If you frankly take the data for 2023, through that 2024 initial first 6-7 months of data, FIs have been reluctant. They really have been on a back seat. But theoretically, if India corrects a bit more, I think FIs will come back. I'll stick my neck out and say that, because historically we've seen that when rates are down, when commodity prices are down, when dollar index is down, emerging markets, they tend to benefit. Post Fed rate cut, money moved into China. That flow now seems to be that trade now seems to be reaching its climax, which means that if China was here, India was here in terms of valuations. After this entire adjustment, India has come down and China has moved up. So the gap between India and China has narrowed down. So the attractiveness for flows to go to China, that is getting diminished. There is liquidity in the world. It's just that you have to figure out where liquidity would move. So it moved into China. Could it come back to India? Well, you fall another 5% on the index, the flows will come back. You fall another 5-10% on individual stocks, you will come back. I'm not so sure you will fall. So the best strategy is that you look at your stocks which you want to buy and you say that, okay, the index may not fall 5%. Let's not bet on that. If it does, it's great. But if I get a volatility of 4-5% in individual stocks because of numbers and because of XYZ factors, I think that may just be a good time to buy. So that's the approach now. Don't make a view on the Nifty. Make a view on the stock you want to buy. And in this entire market adjustment, this volatile phase of FI selling and DI buying or DI selling, FI buying, you will get your stocks.
Okay, speaking of stocks, it's going to be a super busy week. 144 companies will be coming out with their numbers. And interestingly, the Nifty weightage in terms of numbers this week alone is 22.5%. Heavyweight Reliance Industries and HCL Technology is set to come out with their numbers today. So that will, of course, be very closely watched. And the Reliance weightage is about 8% alone. Other than that, Infi, Axis Bank, Nestle India, HDFC Life, Bajaj Auto will be coming out with their quarterly numbers. It's expected, Nikunj, to be a bit muted for Reliance Industries, and HCL Technologies this time around. The revenue growth is seen up about 1.6%. What are you watching for?
See, Reliance numbers are important because they are coming right at the beginning of the earnings season. Normally, Reliance numbers, they come in the fag end of the earnings season, and normally they come on Friday. So is there something different which we don't know? I don't know in terms of, why Reliance numbers which come in the second half are now coming in the first half of the earnings season. One. Second, Reliance numbers have not been great and the stock has underperformed. So could it be a case where little bit of surprise also could really have an impact on the stock per se, because this is one stock where there is FI selling, there is index selling, and there is hardly any expectation. So a little bit of surprise from Reliance, I think, could have an impact of 100 to 150 rupees on the stock in the short term. So unlike last couple of quarters where Reliance expectations were high and the company is not delivered, this year the stock is bombed out for technical factors, and for technical factors to reverse, which they would, if you clearly get a line of sight as to something interesting is happening in their retail business, or if there is some hint which clearly comes in terms of where the new energy business would move. Not that markets are expecting any big large announcement. I mean, the AGM has already set the tone as to what we should expect. But the positioning of Reliance is such that a mild surprise can actually create a big move. HCL Tech, TCS has set the tone for you that the earnings trajectory is unlikely to be a very sharply revised on the upside for large cap IT. So while the compression has started, the expansion is going to be a slow and a gradual process. Now, if that is a backdrop for HCL Tech, until unless a surprise could come in from there, I don't think the market reaction is going to be very large. So with Reliance, little bit of surprise could have a swing effect. With HCL Tech, it really has to be a very concrete commentary where markets are convinced that, oh boy, this time it's different. Then only you will see a market reaction per se. Because HCL Tech is not bombed out the way Reliance actually is.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them, become something more. It's my time to rise.